Question number one. What is your opinion on the situation of global green bond markets today? In particular, do you believe that investors are looking for today this type of security? That the volume of securities issued correspond to this demand? Is liquidity in this market sufficient, according to you? So maybe we keep the line, and maybe you can answer. But of course, if you want, you can say something if you want to react to one of the panelists' proposal.
Thank you. If I may ask you to revive in your imagination one of the slides that was here earlier. It's like a lighter circle, and there is a darker circle within it, representing the issuance of green bonds in respect to the total market. And you can see, I mean, the bonds labeled green represent less than 1% of the $70 trillion bond market. Just to give you a perspective, when was it? 2013, when IFC issued the first $1 billion size to provide liquidity to the market, the overall issuance of green bonds was 12 billion. Today, the projection stands that we're on track to complete this year with $120 billion issuance. That's a 10-fold increase. That's a significant progress. The second number is that $1 trillion. That's exactly what UN is calling for this market to be by 2020. So what does it actually take us to make another 10-fold increase in issuance? And if you think about it from different perspectives, from what's the difference of the darker circle and the lighter circle for the investors? The investors get so much more transparency within the darker circle. They know exactly where the profits are going to, and they ask for reporting, and the issuer is providing that reporting. You do not get that transparency in a wider circle. Then you think about the issuers. They have to figure out, okay, what are the projects that needs to be financed? And the second, okay, how do you set up the framework specifically to give the investors what they're actually demanding in terms of reporting? And you actually have heard the biggest risk for the issuers, it's actually not really even the cost or how to actually measure it. It's the reputation. It's the reputation of making a mistake and seeing your name in the headlines. So from our side, we actually would like to see more all of us would want to see more issuance and more projects being financed. And different ways of increasing it. You already have heard about the Cornerstone Fund, but also we need to provide technical assistance to all the potential issuers that may actually not even consider doing that. That will give you more liquidity and kind of will help us balance this demand-supply dynamics that actually drives this negative green premium. So that's with regards to the issuance itself. Then again, with regards to who is actually issuing, I mean, MDBs, IFC, and EIB were the forefront of initiating green bonds. Right now, we start seeing sovereigns. I mean, in Europe, France is the largest one. Poland was the first one. We have Fiji as the first emerging market sovereign. We, fingers crossed, will see Nigeria announced to be the first African sovereign to issue a green bond before this year ends. So we're talking days. So we just need to see more corporates. So right now, I mean, all the regulators are right now focusing on growing this darker circle and putting some structure around it, but they're also conscious about the disparity of those two circles, they don't really want to put too much restrictions on it so that people will just step back from it. So I'll stop here.
Yes, maybe another international institution for the BEE, for Mr. Romani. What do you think about the state of the market?
I would like to reinforce this point of the relevance of the accountability and transparency that is created by green bonds. And I will try to illustrate how there is a kind of a series of positive feedbacks that are generated by the growth in size of this market by simply taking the EIB experience, which I know directly because, in fact, I drafted the first request for approval for the very first green bond in 2007. So this year is the 10th anniversary of the first green bond, but it is also the 10th anniversary of the Berlin Declaration. This was a document that in 2007 put climate protection and energy at the center of the process of European integration. And one important target was indeed the increase in investments in renewable energies and efficiency. The EIB, as an instrument of public policy in Europe, was asked to do more in these areas. So when we discussed with our management committee this idea for the first time, we underlined that it could have a value for the market if the bank made itself accountable in terms of the actual delivery of the disbursements expected at policy level. And when I say disbursements, that is very relevant because, if you look, for example, at corporate operational plans of the EIB or of others, usually you have targets and KPIs that are focused on signatures, not on disbursements. So the idea was to create transparency around the actual disbursement flow, and this was the real core idea behind the very first green bond. So at the same time, there was the idea that there would be a precision in the description of the projects to be considered eligible for allocation from these bonds. Now, this idea at the moment was ahead of its time. And in fact, it stayed dormant until 2013. 2013, all of a sudden, people felt that the ecosystem was changing. So big banks, investors came to us asking for more size, more benchmark issuance. And this is what we did. But of course, if you conceive a green bond as an instrument that provides the kind of transparency, the more you issue, the more transparency you have. So when at the beginning of 2014, the first issue that we had brought now to market trespassed the 2 billion mark, we said, well, pay attention, because now, we put our face to the market. The market expects integrity, so we need to make sure that everything that we do is aligned with what we say. So this, it took us 1 year, to complete a fully fledged due diligence in this area, and then we implemented an upgrade of the administration at the beginning of 2015. In the meantime, the market, started to develop a new dimension to this transparency because investors all of a sudden came to the table of the forum that was trying to establish shared rules for the sustainable development of this market. And anybody that works in a market knows that the market cannot develop in a sustainable manner if you do not have proper rules, contrary to the general perception in this area. It's not true. The market can only develop if you have people that define the rules of the game and stick to them. So investors came to the table, and all of a sudden they were asking for more than pure quantitative description of how these disbursements were taking place. They started to ask for impact assessment. Now, if you look at this from the point of view of somebody that is not a technical expert in this field, you want to make sure that if all of a sudden you ask your technical specialists to put in a report very transparently and in a very comparative way all the figures that investors ask, that there are no misperceptions in the market from different ways to calculate, for example, GHG emissions. So the due diligence all of a sudden went beyond the EIB, I was mentioning before. We found projects that were co-financed by EIB, World Bank, IFC, KfW, and we looked at the indicators, for example, GHG emission calculations. Guess what? Figures diverged. Well, you didn't have a common representation of the expected impact on these projects, even by institutions of the same kind that were financing the same kind of project. This is the reason why we started to promote the idea, well, MDBs, we need to find a common ground in terms of the way in which we report on these issues. And this led to the IFI framework for impact reporting harmonization, backed by 11 institutions, international institutions of this kind, in 2015. Now, substance and comparability are one thing. The other element is reliability. And I would like to highlight also that here again, this is a proof of the way in which the market has evolved. At the beginning, you know, everybody was working separately in a way on one's own administration. But what is relevant for the market is also assurance that what you say, you do. So external reviewers were important in this phase by simply saying ex cathedra, this is good and this is bad. Yeah? We represented the idea that if the EIB has a certain institutional background and has the technical expertise in-house, then the most relevant objective was to put in place a state-of-the-art administration and then provide all the relevant information to the whole market so that the whole market can decide in this regard. But we also needed a Ubicon system in the end. And in 2016, we worked with KPMG, our external reviewer, to a detailed, reasonable assurance analysis of, indeed, our issuance practice and our reporting practice. And this led to the first assurance report of this kind, covering also reporting. So, one important aspect of markets is that they work indeed on peer pressure. This was said before as well. So once you do something that is you know, showing the way, then others follow in a way because they want to be at the same level. Now, all of this, however, has led us to conclude that there are important elements that are lacking for the further development of this market and its role in terms of accountability in public policy implementation, but also in terms of, you know, provision of that comparability that is required by markets to work in an efficient manner, to decide in an efficient manner. And this is shared definitions, shared classifications of what is actually done. And this is an issue that is not linked to green bonds. It's linked to the underlying green per se. Because unfortunately, these shared definitions do not exist. You do not have a way to classify not only what is green, but in fact the whole spectrum of activities in the economy. And this has now come to the table in a, you know, prepotent way. And we addressed this subject this year in a kind of a sequential manner vis-a-vis the previous steps by saying, okay, let's try and see whether it is possible to establish a framework that establishes a comparability between different ways to classify things. So, I know time is limited, but I would like to give a final word on this because this is very important and takes you really to the center of the current debate, also at the level of, at European Union level. You know, 2 days ago, the European Commission has highlighted that taxonomy is a core aspect of its you know, intentions next year. So what have we done? We have taken the longest list of activities available, the China Green Finance, Green Bond Eligible Project Catalog, that covers, by the way, not only climate, but also other environmental objectives. We have said, well, you need to compare apples with apples and pears with pears. So is it possible to attribute these categories to different policy objectives? So not only climate, but for example, also pollution control. And then within the area of mitigation, which is the most developed one in terms of classifications, we have used the MDB IDFC list, which the MDBs use to, you know, convert their own classification systems in order to produce joint reports on climate finance to see whether equivalences could be established. And yes, this is the case. Imperfect equivalences, but it is possible. Then we extended this with the help, by the way, of R4CE and WWF. We used this work as a platform for a consultation among external green bond reviewers. So that have also the interest to develop this comparability in order to grow this market. And the results of this was that although only limited number of external reviewers provided detailed feedback, for example, Standard & Poor's, that is also you know, a member of the HLEC, like CBI, it is possible for others also to establish this kind of equivalences. Why is this important? Because all of a sudden you take this clarification process to the next step. You can use as medium of comparison one of these lists or a new list that you can construct in such a way that you can establish the translation to start analyze what is really very elusive at this point. That is to say, the screening criteria that are used by each actor in the market to effectively decide of the eligibility of individual projects, for example, within each area of activity for the joint reports, for example, of the MDBs. And we have put all of this work together in a joint white paper that we have published with the China Green Finance Committee with the endorsement of the People's Bank of China on the 11th of November. If you digit EIB white paper, you will find this.
Thank you very much. Actually, you are not far from the third question here. We are talking about the present market and probably the way that we can expect for the evolution, or you expect. So maybe we can ask to the issuer now, and the first of them is the issuer coming from, we could say, not the real one regarding to the financial world, but regarding from electricity, from power. So EDF is a major player in the green bond issuance. What do you think about the market today?
As far as EDF is concerned, and to answer to your question regarding the perception of the green bond market compared to the financing, traditional financing market, we can say that the green bond market attracts investors to EDF who would not usually be attracted to the company as an investment opportunity. And because EDF closely adheres to the green bond principles pillars of managing proceeds and reporting, EDF can give assurance to these investors that their funds are refinanced and only used for green eligible projects, and they cannot be allocated to other group activities. And this is verified every year by our statutory auditors. In addition, green bonds allow investors to engage with insurers on the actual use of the proceeds and the environmental benefits of the investments made. In that regard, green bonds are a great instrument for institutional investors and asset managers to meet expectations, to integrate climate risks in their investment strategies, and shift their portfolio to degrees compatible trajectories.
Thank you. So maybe Frédéric, Samama, now you are on other side because you are more investors than insurer. So what is your opinion regarding to the market on which you are a major player, you say, comparing to the other ones in the world, not only in Europe?
Yes, two comments. The first one is I 100% agree with you. Green bonds are a way to engage with corporates on green. Green bonds are engagement on the fixed income side. Usually when we speak about engagement, we have in mind the general assemblies and so on, the votings and so on. Here, suddenly we are shifting these engagements activities on the fixed income side. And it's great. It's great to send this signal. Now to follow up on the previous point about the side of the market, I think we have to recognize two obstacles. The first one is that the size of the funds were up to now quite limited. The biggest green bond fund so far is about 340 million. It's small. That means that if a large institutional investor wants to invest in, he can only invest for a fraction of that due to constraints in terms of owning the fund. And so it was a limit. With IFC, we are shifting the limits. Up to now, the demand is for $1.2 billion. So that means that we are multiplying by almost 4 the size of the biggest fund on green bonds ever. So it helps investors allocate significant amounts of money into this asset class. On the other side, we must recognize as well that issuers are facing some obstacles as well. The costs, the reputational risks, the knowledge. And here, to follow up on what you said, IFC is playing a pivotal role as well, because IFC is setting up a technical assistance facility, and that will do at least 2 things. The first one is that they will work on homogenizing, standardizing, raising the standards of the documentation associated with green bonds in order to avoid the greenwashing, the reputational risks, and so on. And the second thing that they will do is that they will establish an executive education program in Stockholm. It means that bankers in emerging markets will have the opportunity to get educated in Stockholm about green finance. And so what does it mean for an issuer now? It means that if you're a banker of a commercial bank in Mexico, in Turkey, in China, and so on, what do you hear? You hear that suddenly there are big funds being available to buy the green bonds. So it means that if you issue a bond, you will diversify your base of investors. It's good. You hear that the issues related to the documentation being handled by IFC, checked. You hear that you will be able to send your guys to Stockholm to get educated. And so suddenly, you will be able to communicate with your employees, with your clients, with your policymakers, that you're shifting parts of your balance sheet towards a low-carbon economy. So you will benefit from that for free. So you expand your base of investors. You have the issues of documentation being solved. You get your people educated, and you can communicate that you're part of this big movement of shifting the economy towards a low-carbon economy. So suddenly, if you're a banker in an emerging market, due to the innovation of IFC, you're benefiting from a free option just to shift your activities toward the low-carbon economy. So I strongly believe that due to the work on the demand and the supply side, the demand by having a big fund, the supply side by helping issuers issue green bonds, it will massively accelerate the development of green bonds in emerging markets.
Thank you very much. So, Frédéric, Gabizon, your opinion, we could say, you are an issuer, you are with the big companies preparing issue. What do you think about the expectation of the market and maybe the expectation of the companies?
Sure. But, you know, maybe, I mean, obviously, as I mentioned before, HSBC is an issuer and is a lender, but we're also an intermediate. And maybe to give you the view on how we see the market, I'll play my role as an intermediate. You know, 2 or 3 points clearly of optimism. One is that, you know, the updated number that I have here is over 115 billion of issue this year. That makes a rise of 40% from last year. So I think, you know, these are very striking numbers. The second point is to your question about, you know, having more corporates, which obviously, you know, we'd be delighted to have. Also, year to date, the SSA world, which are our supras, agencies and sovereigns, represent 38%, but the corporates are 34%. So the market is today makes it much more even, and we do have a lot of corporates, you know, coming in to issue, and obviously we've had, you know, the EDF experience, the NG and all this world. But, you know, the third point is innovation, and as a finance person, I think it's very important to stress that the you know, that the green bond is also a financing tool, and it's not only about senior debt, but for the first time we have seen on the financial institutions the first T2. Now I don't want to bore anybody about this, but, you know, but all these layers of between equity and debt are very important, you know, for banks for obvious reasons, and so we've seen that for the first time with the T2, and also we've seen, you know, for the first time this year hybrid transactions. You know, there's a very recent one for Iberdrola, you know, in Spain, for 800 million. There was also a Dutch company that came there. And thirdly, we see some high-yield transactions, issuers coming to this market. So I think, you know, this is very promising because it makes it a compartment which becomes and has different tools of issues to be offered to the market. Now, on a more challenging perspective, as it has been said before, unfortunately, or fortunately, the way you want to put it, demand is massively oversupply. And hence, many of those investors are buy and hold investors. And so the liquidity is pretty poor, you know, which obviously, you know, makes it quite complicated. And we know why the green bond issuers are, you know, because the technicalities behind are extremely challenging, not so much in terms of structuring, which is something that can be clearly overcome with the help of all my neighbors here, and the investors, but namely because you have to find the right investment of the proceeds toward the proper assets, which obviously makes things, you know, much more complicated. And even on the sovereign front, we see how much it's been a very huge challenge for France, but, you know, for all the other sovereigns. Now, obviously, I know that we'll have some friendly competitors that I can't raise any names, you know, that we're very strongly working in order to bring them to the market. But I do think that, you know, this demand being superior to supply will definitely keep on, especially with the policymakers making a very strong impetus here, and clearly, you know, all the citizens that we are will ask for more green assets. However, I do think that, again, you know, the 40% increase in terms of market rise is extremely promising. Now, last but not least, I know we want to concentrate on the green, but also just to name that the broadly social and sustainable compartment also has been multiplied by 2 this year. And so, you know, this is also another compartment whereby investors can try to find some way and sneaking in, you know, the green bond activity.
Yeah, well, just a point, when you say high yield issuer,
yes,
it means higher risk, but higher risk on the green, with the risk of greenwashing or not? Just on
no, it's not about the greenwashing, and I think there is a very strong link here. You know, but obviously, you know, it's probably another debate, but it's very strong. Is the high yield is more regarding the rating of the issuers, and it's got nothing to do with the greenwashing, but the very low level of interest rates that we're seeing is obviously offering opportunities. Investors asking for high yields are asking for high yield issuers, and for those issuers that could not access before, you know, this market, if they bring also a green component, then it makes it even more appealing. So there is a very strong link between the green, you know, for all these newcomers and the level of rates.
Thank you very much. Maybe just before, when you're with your slide, we saw that for the Luxembourg Stock Exchange, and especially on the green platform, you are on the outlook of big increase on the Luxembourgian market. Is it right or not? Are you thinking that you will have a pressure from the market or not? Or do you think it will be something that can be considered? And actually, we are on the second question, how you see the evolution of green bond markets. Do you think for your institution there are outlooks that are clear, or there is a possibility maybe of a high scenario and low one?
Yeah. Well, I'm not able to give figures, but we clearly believe that the market is still pretty much in an embryonic phase. 1% of the overall fixed income is nothing. So what we hope is that it will not just gradually mainstream, but we also hope that at a certain point the line between a green investment and a mainstream investor will be blurred, because sustainability will be embedded in any kind of investment. And that is the perspective, and the optimistic perspective we have for us and for the market. Now, in terms of perspective, of course, we believe that the drivers are just too strong to be ignored. Policy-driven, the millennium generation, which is coming up with a big cultural shift in terms of getting this kind of non-purely financial issues integrated in financing, and the need to supply where public budgets cannot finance any longer. Now, what we have been seeing is a lot of new entrants into the market. So we've analyzed the second quarter of 2017, and 52 of those green bond issued and listed with us are actually from issuers that have been tapping in the market for the very first time. We've had Gas Natural last week, Spanish issuers. We've been having Ørsted from Denmark. Actually, some of these are even issuers that are not that familiar with capital markets themselves. They're using the green label to tap for the first time the market. Talking of scale, I just go back to what Frédéric has just mentioned. There is obviously a mismatch, a huge mismatch between the demand and the supply. But I think things are changing. A couple of years ago, investors would have just bought anything labeled as green just for the sake of having some green flavor in their portfolio. What is happening nowadays is that investors are more and more aware of their power to engage with issuers, and to engage in meaning also not buy what they could obviously and easily buy. And Repsol gave a case, a precedent for them. So Repsol officially was labeled as a green bond. It has very good criteria of transparency. It was committed to reduce CO2 emission, but at the same time, the underlying model of fossil fuel would have been perpetrated, and it would not have allowed a real shift of the underlying assets. And that's why some investors were not that convinced about buying into this green bond. So it's still an investors-driven market, which is good to the sense that investors are learning by the day how to use their power and how to interpret the taxonomy and compare between products. But at the same time, it's a risk. It's a risk, but it shows that the market is not balanced yet. And we see that in legal documentation, things are changing. In the last 12 months, we've been seeing more and more prospectuses coming out with covenants and with green risk factors that tend to protect more and more the issuer, the banks in the arranger role, and the second opinion provider by any liability. So what happens when the green bond issuer doesn't or cannot comply with the user proceeds obligation or the impact obligation? Basically, there's no such a thing as a green performance. So it's what I would personally like to see is, and then we're going to the regulatory context, is a bit more of clear accountability on the issuer side that would be stronger than just the reputational damage that they have nowadays. Do I have time to make a little bit of a view on reporting, on an encouraging note, or shall we keep that for...
Maybe later, just after?
Sure.
Okay, thank you very much. So maybe for Standard & Poor's, the rating agency, the strategy of the company today, do you think that the green rating, because here we are talking for the specificity for your company, do you think green rating, which could be, of course, another side of the increase of the green rating, of the green bond emission, green bond issue, do you think it will be a significant market for your company tomorrow? Is it still today or not?
Yes, I think I just wanted first to follow up on some of the comments that have been made by the panelists here. So your first question, or the last question of your first question was about, is the liquidity sufficient? And clearly it's not. So we don't have enough green bond transaction at the moment, as it has been said earlier. And one of the key challenges is make sure that issuers go to the green bond market so that we have more issuers issuing green bonds. And I agree with AMUNDI that one of the challenges is, the knowledge and the expertise and providing technical assistance to those issuers to make sure that they understand and that they can issue green. But another challenge, when you talk to issuers, they will only issue a green bond if they get a pricing advantage. If they don't get a pricing advantage, they have no reasons to issue a green bond, except if there is a very strong, robust, supportive regulatory environment, as this is the case in France. But in many other countries, it's just the pricing advantage that is driving the issuer demand for green bond. So this is, I think, an important consideration, and you have lots of research at the moment about the pricing advantages for issuers or for investors. Very good studies from the CBI or even HSBC. One of the conclusions they've made recently is that the pricing is advantageous when the bond goes to the market, so compared to the initial price talk. But then very often the pricing advantage disappears and is comparable to vanilla bonds, to similar vanilla bonds of issuers. So I think the key question behind it is, are investors ready to pay a green premium to the issuer because the issuer issue a green bond? So are the issuers, do the issuers have a pricing advantage? Are investors ready to pay a bit more to actually purchase a green bond? So that's something that I think will be a key driver of the green bond market going forward. That's at least the conclusion that we got to from the discussion that we had with issuers. And, I think if we have further liquidity in the market, one important thing we want to see is investors having more choice about the green bond they can purchase based on the green value of the transaction. So another important element is for investors to understand the green value of the transaction and to reveal the green value to make sure that the greenness of the transaction is captured to the pricing of the bond. You need to reach a certain level of liquidity in the market. So these are really two important elements, I think, for us at least. We really see the green bond market developing, but the pricing advantage for issuers and the transparency around the greenness of the transactions will be the two main drivers going forward, in addition to regulatory support.
Thank you very much. Mrs. Carole, when we talk about evolution, we are really in the second question, but for the evolution of the green bond markets, it has been said that it is necessary to get new issuer. Do you think that it's possible that in agriculture, and especially in France and especially in Europe, we might have big companies or big cooperatives that would be able to make big green bond issues for the different farmers? Do you think it's possible, and do you think that this world is ready for that?
As you may know, agriculture is very conservative. So 5 years ago, it was another world. Nowadays, at the present time, people are thinking over and they stay one step ahead, one step back. So, I think that after 2020, with the agricultural a common policy, we will need other financial products for agriculture. It's the reason why we need to anticipate. And even if the cooperatives are not ready right now, they will be obliged to have new ways of financing agriculture, because subsidies, given as it was done all over these decades, will not go on. And it's very important to work together with academic, with universities, with insurance, banks, to prepare the future and not to be late after.
Yes, and especially for agriculture, it's possible to get some green investment, because it's possible to identify here. We've got the beginning of the debate around green agriculture. It's possible.
Yeah, right now it's too early, but why not? Yeah. The juridical aspect can be analyzed, and we can think over it, but not now.